Hey, what's going on, guys? It's Daniel here from Miracle Trading. So in today's video, I'm going to be talking about how I passed my eval in a single trade. So I'm going to be doing a trade recap on how I mapped my day and all that. So let's start with the daily time frame. As you can see, um, we had a premium wick right here, which we failed to um, come all the way back to the consequent encroachment up here, which is this level right here in the middle. We came all the way to the lower quadrant, but we failed to close inside of that. All right, so this indicates me that price is um, extremely bearish right here. Okay, so if we drop down to the lower time frame, 15-minute, what we have right here is, so I did the trade on Monday, which is in this piece of price action. We had the new day opening gap low, which is right here, that comes at this level, and we had the previous opening range gap high that came and on Friday, and we had this new opening range gap low. All right, so this is 9:30 New York Eastern time. So what we had is we had this minor buy side liquidity. We had relative equal lows down here, and as you can see, I have my 8:30 opening price, midnight opening price, um, opening range gap from previous week right here. That comes at these levels. So this is the high, the upper quadrant, the consequent encroachment, and the lower quadrant and the low. So as we can see right here, what price did was we swept these highs, came slightly to the new day opening gap. So let's go and drop to the 1 minute time frame. All right. So what we have right here is I did anticipate um to see a manipulation move at the 9:30 equities open, which we did very good right here. So we had these relative equal highs right here, which I have stated as minor buy side liquidity, and then equities opens right here, equity opens right here. We manipulates that all the way. We see all these wick, the wicks do the damage, and the body's still the story. All right. So what we have right here is, if we take a look at ES, we have a SMT. ES just did a higher high right here, but NASDAQ failed. So this is where we use um, the rejection block, okay? So what I'm doing here is, this is our rejection block, all right? Bearish rejection block right here. And if we do grade that rejection block, we can see now that we came all the way up here, all the way up here, and all the way up here, but we failed to close in the consequent encroachment, the 50% level of the rejection block, all right? As well as at the same time, we have this SMT right here. So this indicates that we're extremely bearish, all right? So I did my trade based off of this rejection block, and after the SMT liquidity swept and um, coming back to the new day opening gap low, all right? And my confirmation was, my entry was a 30-second fair value gap right here, inversion fair value gap, which the first presented fair value gap got violated right here. So I used it as an entry right here. So this summer red, I don't have access to it at TradingView, but uh, I just used the TradeOvate access. So targeting these relative equal lows right here. But if I was not on my eval, and let's say I was trading real funds right here, I would completely um, close my position right here at these relative equal lows right here, as well as these relative equal lows right here. So these would be my low hanging fruit objective, and my full TP, my position will be completely collapsed right here. All right, because as you can see, um, we went into a chop right here at 950. All right, so what price did was engineered more liquidity right here. So this is when price is bearish. What price does is it creates these swing lows, making people to open their long positions right here and right here. okay? So I would not want to anticipate or go through that, so I would just completely close my position right here. So as we can see, when displacing with this kind of speed and momentum right here and coming all the way back to what? To the opening price of 830 and above it. So this is what is premium and discount, all right? So we can see it. And also for the whole day, like what made me to be bearish is we are above the midnight opening price, which comes at this level right here. This is the midnight opening price right here. So when we are above the opening price of midnight right here and right here, this is when price is in deep premium, okay? So this is when price is in deep premium. So that's what makes me to go and look for shorts. And then if we switch to the 5-minute time frame, we see we have no bodies close above the 830 opening price. We can see a we can see a little pullback, a little wick right here, but we fail to close above. We fail to close above right here, and right here. So this tells us what we are bearish, all right? So leaving all these wicks right here is just an indicator that prices want to get lower, all right? And my final TP being here, and risk to reward would be so I entered somewhere around here, stops here, and my TP would be here. So that's a 127 risk to reward, okay? That's a pretty solid risk to reward. Normally, I would take partials or just completely collapse all my trading position right here, but I was just trying to pass my eval, so that's the reason why. So as we can see right here, we can see the quadrants of the previous opening range gap right here. We we can target these levels as well. Okay, so we can see how these acts like support and resistance right here. Okay, so I guess that's it. I hope you find this video helpful, and if you enjoyed this video, leave a like and subscribe, and until next time, be safe.